Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand, Forex and gold and S&P fundamental and technical analysis for the week ahead starting the 16th of February. I hope you all had a great trading week. And so let's get into the week ahead. And investors will closely watch the release of the FOMC minutes and speeches by several Federal Reserve officials in the US alongside key housing data such as building permits, housing starts, and existing home sales. The US will also see the latest S&P global PMI data. Globally, interest rate decisions are expected in Australia, New Zealand, and China, while inflation figures will be released for Canada, United Kingdom, and Japan. Trade balance reports are due from the Euro area and Japan. Additionally, PMI figures will be published for Australia, Japan, France, Germany, Euro area, and the UK. Germany will release its ZEW Economic Sentiment Index, while retail sales data from the UK and Canada will also be in focus. So lots going on this week, especially the central bank announcements for Australia and New Zealand. So getting into the technicals and some more fundamentals. So yeah, this is a chart of the US dollar index, equally weighted dollar index, and this is I guess I've got a lot of questions with regards to why is the dollar selling off. The dollar fundamentally is a buy, and ultimately I made a video for the members group, which is about a 40-minute video. So if you are a member in the Discord area and you haven't watched it yet, please watch it. But this is just going to be a very, very short summary to kind of answer the questions for those on YouTube, and maybe get a little bit of an understanding as to what is happening. So ultimately, when you're looking at fundamental analysis, it's really going to be driven by interest rates, right? Currencies are driven by interest rates over the medium to long term. In the short term, there are of course fundamentals, but also risk sentiment events, right? And at the moment, the narrative is really about tariffs and how tariffs are going to affect not only the US but economies around the world. And so when this is the dollar index, right? And so when Trump was elected, the rumor was that he was going to be quite aggressive on tariffs, right? And so tariffs, and a tariff threat would cause higher inflation. It would cause economies to maybe go into the contraction phase and possibly recession phase, and cause that risk-off environment where not only does the US dollar do well in a risk-off environment, but also higher inflation. If it did cause higher inflation, if it does cause higher inflation, then the Federal Reserve are less likely to end up cutting rates, right? In if inflation starts to rise, then and it starts to rise beyond their 2% target or way above their 2% target, then in fact they have to hold rates and maybe start to hike rates. And so in this, from say July, August, this is where the Federal Reserve were cutting rates due to inflation coming down. But then we had a bit of a reversal in the possibility of Donald Trump coming in, and then the rumors started about potential trade tariffs. And once he won, then those rumors started to obviously gain legs. There was also as well good data, inflationary data as well, and jobs data and economic data for the US, which drove the dollar higher towards the end of last year. Now, part of this move was not only good data, but it was the tariff threats. So the market was getting ahead of itself and pricing in what extreme tariffs or a trade war would look like in the currency, and they were pricing that in, right? Because fundamentals is really about buying the rumor, right? It's buying the rumor. The money's made on the rumor. The money isn't made once the event happens. The money's already been made, right? So if the event is obviously foreseeable, because not all events are foreseeable, but if the event is foreseeable, then the market is going to price that in ahead of time. And so Well, that's what the market was doing once, when Donald Trump was actually elected, and the data was supporting, positive dollar, and as well as the trade war, right? Then we get, around February, the first kind of tariffs start to come in, and Donald Trump then extends the tariffs, right? In terms of he's not as aggressive, and he's given an extension to Canada and Mexico. So that is now seen as Donald Trump not being as aggressive on tariffs, which then means that everything in terms of the price, the tariff effect that was priced into the market, is now kind of being priced out of the market, or priced out of the market to a lesser degree, right? So we're in an environment where, the more or the longer that tariffs take, or the less severe tariffs are seen to affect economies, and maybe the more little bit less aggressive that Donald Trump is on tariffs, that tariff premium has to be then priced out, or the market is going to price it out. Doesn't mean that the dollar isn't a buy fundamentally, because fundamentally, when we look at, for example, rate cuts by the end of the year, and what central banks are doing, the Federal Reserve at the moment are the bank that are really kind of cutting the least, right? At 31 basis points, and they're only really looking to hike. The market is priced in one. Sorry, I said cut. I said hike basically, but what I meant to say is they're pricing in 31 basis points worth of cuts, and they're only looking to cut once this year at the moment, as the data is supporting that, and the market is pricing that in. Whereas you look at the European Central Bank, you look at, for example, the RBA, you look at the RBNZ, and other central banks, they're cutting a lot. A lot more. Some to a degree, they are cutting a lot more, like the RBNZ, but every other central bank is pretty much cutting more and trying to devalue their currency more than the Fed is, apart from the exception of the Bank of Japan, who are on a hiking cycle. But I should say, when we look at price at the moment, the opportunity really is made, and it presents itself when price and value are not aligned, right? So when price is doing something opposite to what really, when you're looking at the value of any kind of asset, they're doing something different. So you're getting price coming lower, but ultimately, fundamentally, the dollar really, when you look at monetary policy, is still really a buy. And so at the moment, in the short term, we're seeing that tariff threat being priced out of the market. But eventually, what should happen, right, is that the dust settles, that gets priced out, or priced out to a lesser degree, and then the market starts to say, okay, well, if I'm investing in any currency and want to put my money into any economy, then where is that going to be? Is it going to be in Europe? Is it going to be in Switzerland, or is it going to be in the United States? And this is where you look for buying on the dollar. Now, again, I have no idea where prices are going to reverse. No one does. If they did, and if I did, then I would pretty much bet my house on it, right? But ultimately, no one knows exactly where price is going to reverse, right? So this is the reason why we enter into smaller positions and take calculated risk to see and bet whether price will reverse here. Now, prices have come down to a really nice fresh area of demand. And so this is an area now, when we're looking at the dollar index, the dollar versus the euro versus the pound versus the yen versus the Canadian dollar versus the Australian dollar, against the New Zealand dollar and the Swiss franc. This is where you'd say, okay, is it a bargain price? Again, nobody knows. But for me, I'm still long dollars. My bias is long dollars. Yes, I understand what's happened in the short term, but I'm not trading really the tariff sentiment. I'm trading bargains and values. So in fact, this now is advantageous for me to look for long trades on the dollar, because ultimately I do think now the market may be getting a little bit, ahead of itself, and I'm willing now to buy and enter into, some more dollar trades around this area here. So ultimately, reciprocal tariffs, to start in April, that is the reason why prices have kind of, moved to the downside for the dollar again, because of the market's interpretation that, tariffs are being kind of pushed backwards rather than, or they're pushing, further into the future rather than immediately, right? Same thing with the tariffs extended. They're being pushed further into the future rather than immediately. So you're seeing that effect. But ultimately, Donald Trump is still looking to, impose those tariffs. And even if everything works itself out between countries, when the dust settles, once everyone gets back to monetary policy again and looking at where, economies are, etc., I think that the dollar should still be really more of the buy. So that's really my analysis on the dollar, and that was, kind of I guess in this article, I'll just kind of read this. A couple of paragraphs, and it says here: growing speculation, the new tariff threatened by President Donald Trump, are mainly intended as a negotiating tool, are undermining the popular trade of betting on the dollar. So Bloomberg's gauge of the greenback slid to a 2-month low after Trump ordered his administration to consider reciprocal tariffs to rebalance trade relations, efforts that may take weeks or months to complete. That's adding to the conviction that the levies are more of a tactic to gain a better deal than an end in themselves, and reducing the prospect of quicker US inflation that's boosting the dollar. So yeah, we've got that, but ultimately we do also have in the US channel, United States channel, is that producer prices for the final demand rose 0.4% from a month earlier, following an upward revised 0.5% increase in December, according to a Bureau of Labor Statistics report released Thursday. The median forecast for a Bloomberg survey of economists called for a 0.3% gain in January compared with a year ago. The PPI increased 3.5%. The data serves as further evidence that inflation progress has at least stalled, if not in danger of being reversed. Combined with a solid labor market, it will likely keep the Federal Reserve on hold for the foreseeable future, right? So hold meaning they're not looking to devalue their currency as much as other currencies, right? As much as other central banks. Policymakers are also awaiting further clarity on President Donald Trump's policies, particularly tariffs, which are already causing consumer inflation expectations to rise. So again, buying the rumor, right? But again, the dollar, as far as an economy and inflation and interest rates and monetary policy, look quite solid in comparison to other countries and central banks. So for me, the dollar is, a buy, and any pullbacks, again, I'm telling you what I'm doing, for me, are buying opportunities. The dollar yen, so we've got the dollar yen prices pulled back to that supply zone. Dollar obviously sold off a bit, yen strengthened, I guess more based on again, maybe some dollar weakness. Dollar yen isn't really a pair that I'm looking to trade, but if you are, then you're looking at really a pullback into a demand zone here, or if prices move down into the 150s, that'd be a decent area to look for a buy. But ultimately, I'm not really interested in this pair. I do think that the dollar has the overall advantage. But the yen are a central bank that are hiking rates, and so if I'm buying the yen, and I'm not buying it against the US dollar, I'm going to buy it against a weaker currency than the US dollar. So the divergence in terms of monetary policy isn't necessarily there in terms of strength and weakness, in my opinion. Although, of course, price can do what it wants, but for me, I'd rather look for a better and easier trade to get involved in, like the dollar Swiss, right? So the dollar Swiss for me is definitely a buy, and Again, no one knows where prices will reverse. Will it reverse now, or will it reverse, down here if it pulls back? But ultimately, the lower this goes, is the more of a bargain I believe the dollar Swiss is. The Swiss franc and the Swiss National Bank really are considering going into negative interest rates, whereas you have the Federal Reserve are looking to hold rates, and there's even rumors of potentially even hiking rates. Some analysts are saying because inflation may be a problem. So ultimately, that's a big divergence. So path of least resistance should continue really to the upside. It's moved, higher since October, and if you get your ideas in terms of your trading bias from price action and trends, you should still really be looking for the trend. But fundamentally, I think this is a really decent buy. So again, the more we pull back, is the better the trade, and the more potential upside you have in terms of, if you buy low, you want to sell high. This is considered as expensive. So is this going to be expensive again? And maybe prices maybe even move past that. But yeah, I think fundamentally the dollar Swiss is a buy. Same thing with the dollar CAD. This level had been touched, once, twice already. It was susceptible to a stop hunt. The stop hunt didn't happen. So basically, prices moved down to this area of demand. And again, I do believe that the Fed are in a better position than the Bank of Canada, and so the Bank of Canada are really waiting for what Donald Trump does with tariffs. Remember that March is coming up. Donald Trump extended the tariff, I guess, deal, and what Mexico really have to do, and Canada have to do, to the end of the month. So they have to kind of negotiate. So it's only really around about another 2 weeks. So we could see if Canada don't play ball, and even if they do, I still think that the dollar should really be more of the buy. So whether it's a buy here, or if prices pull back down to the 140s, I think there's more upside potential to go. On the pound dollar, the pound dollar for me should still be more of a sell. There was some good news out of the UK, and that was based on the unexpected growth at the end of 2024 in terms of GDP, and it was a reprieve for the Labour government after a woeful run of economic indicators. So gross domestic product rose 0.1% in the fourth quarter, an acceleration from the flat performance in the third quarter, the Office of National Statistics said on Thursday. It was better than the 0.1% fall in output expected by economists and the Bank of England. It came as output in December alone grew a faster than forecasted 0.4%. So, it was some positive news for the UK, but ultimately, growth is still really at 0.1%. So yes, they kind of avoided, I guess, a negative reading, but ultimately, I don't think, when you can again compare their economy to the US's, I really don't see why the pound should really rally, significantly against the dollar. So I do think that there is a nice opportunity to look for shorts here, or if prices pull back up to the 127s, I think that's going to be actually quite a nice area to look for some short trades. And if you are looking to join Trading 180 and the mentoring group, enrollment opens on the 24th of February, which is going to be, the next week, Monday. And I know a few of you have reached out to me. And yeah, I look forward to working with you guys. And by the way, if you don't join, that's obviously, more than fine. But if you do want to accelerate your your fundamental analysis, I definitely recommend buying this book. It's called The Art of Currency Trading. It's by a gentleman, I think he was an ex-market maker for HSBC, Brent Donnelly. There's actually a sale on it if you're in the UK. I'm not too sure wherever you are in your region, but 35% off. It's worth £52, which is seen as quite expensive for a book. It's definitely worth it. So it's an absolute bargain at £33, right? So although yes, it's 2019, it's a fantastic book and still relevant today, and I think it'll forever be relevant, right? Because fundamentals rarely ever change, right? And so I highly recommend The Art of Currency Trading if you are a fundamental, or you're looking to get into fundamental traders. And if you're a fundamental trader, it just puts things into great perspective. There's a lot to gain from that book. So again, just a reminder that enrollment opens on the 24th of February, and enrollment won't be open for too long, maybe about a week. So you have a week to join, and then I'll close it again for another few months while I work on and work with those traders. So if you miss this one, the next one may be in May or something like that. So you'd have to wait until then. So getting back to the charts, looking at the pound yen. So pound yen again, I was interested in this, and I was hoping that the data for the UK came out a bit bearish, but because it didn't, I'm not really looking to trade this pair anymore. I was waiting to press sell really actually I wasn't necessarily waiting to press sell when the news came out, but I was waiting for certain setups after the data would have confirmed the sell. But because there was positive news, GDP month for month came out higher than expected. For me, I just didn't want to get involved in this trade. But if you are then and you want to buy the yen over the pound, then you can look for some more downside. If you are looking to buy the pound over the yen, then you can look for a buy trade at that demand zone right there. Quite a nice area in terms of for those who know about CPR setups and capture pain relief. That is definitely a CPR. The relief end of the trade should be there, but fundamentally not necessarily interested in that anymore. Euro dollar. So euro dollar, actually this is the euro index, sorry, not necessarily the euro dollar. So just like the dollar index, this is the euro index, and it's looking at the euro versus the dollar, the pound, the yen, the CAD, the Australian dollar, the Swiss franc, and the New Zealand dollar overall. So I like to look at this to kind of gauge how uh, the euro is doing, as well as the obviously dollar is doing, and various other currencies. There's the yen index and every other currency index that I also look at, but I don't necessarily talk about in the YouTube videos. Now it has the euro has pulled back, and so if you are a seller like myself, shorter of the euro, then looking for short trades right now should really be what your direction is, and it's a good time to look for shorts on the euro. And just like the UK, the euro area managed to eke out growth at the end of last year after all, with Eurostat revising it up its initial estimate. So it says here European central banks expects headwinds to persist this year, but still see the conditions for recovery in place. It predicts expansion will accelerate to 1.1% from 0.7% in 2024. The weakness of the economy is one of the factors cited by officials, arguing for further interest rate cuts, because central banks will want to cut interest rates if the economy isn't doing well. So the geopolitical situation is also weighing on the outlook, with US tariffs on European goods a particular risk. President Donald Trump on Thursday ordered his administration to consider imposing reciprocal tariffs on numerous trading partners, and also floated auto levies, a move that would be a particular hit to German car makers. So again, we still have the tariff threat, right? And as long as that is in place, I do expect the euro to continue to weaken. in at least in the short term. So going to the euro dollar, we've pulled back this week, probably stopping out a lot of short traders. Now, I do think this area is quite nice for a sell overall. So although this level has been touched once already, there is also the possibility that we could see a little bit of a stop hunt above that zone there as well. So if you know how to trade stop hunts, then you'll be looking for the stop hunt trade just above that area if it goes into that fresher area of supply. But overall, again, path of least resistance should still really be to the downside. Euro yen. This is a trade. This is a pair that I am bearish on, although I'm not in this trade because I'm in other yen shorts. I'm in actually the Swiss yen and the New Zealand yen short, and I don't necessarily want to load up too much on yen pairs. But if you are looking for shorts on this, then basically this week was definitely an opportunity as prices ended up pulling back. I'll readjust that demand zone. So the yen, in my opinion, should be more of a buy than the euro. And so let's see. But of course, everything at the moment is being driven by the effect of Donald Trump's tariffs. So unfortunately, short-term price is very unpredictable. But overall, if you're looking at monetary policy, the ECB are cutting rates, the Bank of Japan are hiking rates, although be it very slowly, and that divergence or convergence should be more favorable to the yen. Looking at the euro pound, and the euro pound, again, not really a pair that I'm looking at or looking to trade. So I guess if you do want to be a buyer of the euro over the pound, and I think the pound probably does have a bit more of an edge than the euro, then you're looking at a pullback down into this demand zone if you want to buy the euro. But if you're looking to buy the pound, then I think at the moment, unless prices make a lower low, then a pullback up into a supply zone and then a short trade from there would be what you're looking for. But yeah, I guess if you're looking at any kind of intraday trades, I do think that there are traders kind of caught up at this high here, right? That area there could be used as supply right there. But that's the more of a different trade, not necessarily daily supply and demand that I trade. It's more of a CPR trade. And again, those who are in the Discord group, you'll definitely understand why that's a CPR and why you may want to get involved in that if you're looking at short trades and buying the pound over the euro in the short term. Looking at the Aussie dollar, US dollar. So the Australian dollar has rallied a bit. Remember, there are rate cuts potentially being priced into the market. Now, why is the market going higher? If there are rate cuts, shouldn't the market be going lower? And if the market is going higher, then a couple things could be going on. Mainly, the main thing is that traders are positioning themselves to go short, so stops are being taken out, right? And so where are all the stop losses? The stop losses would be above major highs, major lows, right? So ultimately this could be just a stop hunt. Now we could also see a dovish, also a hawkish cut. And a hawkish cut, and I've made a video on this before, but just to kind of explain it briefly, a hawkish cut is when a central bank cuts rates, but their speech afterwards is quite hawkish. So they might say something like, well, we don't expect to cut any more, right? This might be the last cut for the year. So again, this might be a hawkish cut. I don't think that the Reserve Bank of Australia will say that it's going to be a hawkish cut or indicate that it will be. So I do think that I think that any short trades on the Australian dollar should be any moves up, I should say, should be shorts on the Australian dollar. We still have tariffs going on. Donald Trump isn't finished with China in terms of the imposing tariffs. So I do think any pullbacks on the Australian dollar are likely to be short trades on the Australian dollar, US dollar. Again, when we look at the update, you've got 76 basis points worth of cuts being priced in. And then for the Fed, we've only got 31. So ultimately, I think the path of these resistance should still continue to be to the downside. But again, this is going to be driven by tariffs, and if tariffs are seen as not being as impactful, or Trump isn't as aggressive on tariffs, then you're likely to see actually quite a strong move to the upside in the short term. The dollar, I'm sorry, the gold again making new highs, approaching $3,000. So it seems like the gold market is still in buying mode in terms of risk off. So ultimately, I do think that the path of these resistance should still be to the upside. Any pullbacks should be buying opportunities. I think the best buying opportunity would be somewhere around the 276s, somewhere around here. If you're looking for a buy trade on gold, a bit more of a pullback. But yeah, fundamentally, it does look like central banks are looking to buy or are looking to buy a lot of gold if they haven't been doing so already. And again, fears. But ultimately, this move to the upside, what goes up must come down. So we could be due quite a decent pullback for anyone who's missed out on this move to the upside. Looking at the S&P, and the S&P keeps grinding higher. I do think that the S&P is a buy overall, but not buying at highs. Really waiting for quite a large pullback down into the 59s, 58, 75s before looking to go long on the S&P. I think that that stock markets around the world, although you go on YouTube or you go on TikTok, and a lot of analysts are saying that the S&P is overpriced and due a pullback. They've been saying that for the past probably 4 years, right? They've been saying that around. They said that around COVID, right? They said that in 2021 around where the Russian and Ukraine war started, and it's just kept breaking to new highs and new highs. And if you zoom out, really the path of least resistance has been to the upside. You may have made some money shorting the S&P to some degree, but all the money's been made moving to the upside. So I believe that it can still continue to go higher. Of course, I'm not saying it's going to go higher. Nobody knows. But any pullbacks, I think, are buying opportunities for the S&P. And so that brings us to the end of the weekly analysis, and now looking at some trade updates and a couple of new trades that I've entered this week. So looking at the pound, and I managed to get stopped out for a small loss on the pound. So from last week, I only managed to get in on one position. Prices didn't pull back. When prices hit a 1-to-1 on one of my positions, I ended up taking 50% off, and then I was trailing my stop down, right? So trailing my stop was here, right? So as we made lower lows, basically trailed my stop down here, and then trailed my stop down to below here. So the position ended up being stopped out around the 1-2-4-5s this week on the Wednesday. And so my original entry was here. I'd already taken 50% profit and then trailed my stop down. So overall, this was a small profitable trade on the pound dollar. The New Zealand dollar, a similar situation, but with the New Zealand dollar, I ended up getting in on two positions. So this was, you see that wick spike up there. Again, you can watch last week's analysis. That trade ended up being a nice 1-to-1, right? So from there, ended up hitting a 1-to-1. So this becomes a profitable trade. And then it's just about, my original entry, the market order, which was around here, and trailing my stop down as prices went, made lower highs and lower lows. So that's basically what I did, right? So locked in some profits. So ended up, as prices made lower lows, the second position ended up being pretty much a break-even trade because I trailed my stop there. My original entry was there. That's where my stop loss was. So it's pretty much break-even or a very tiny loss on that. Very, very tiny loss if you want to call it a loss technically. But yeah, I'd won one, and then the other trade was a very, very small loss. Pretty much a break-even trade. So that whole trade idea at that particular time was also profitable, and Brent as well. So oil, I did enter on oil. So from last week, I ended up entering into 4 positions. So when prices pulled back this week or on Friday, we ended up getting involved in all 4 positions. I was saying in last week's video, let's see where this goes. And what we saw was prices ended up getting a 1-to-1 on 2 of my positions. So this position here, when prices triggered that buy pending order, 1-to-1 was hit right there when prices came up. And then on the second position, which was around here when prices, came down and triggered me in around there, that also made a 1-to-1, right? So now what I was attempting to do was going to swing trade the other 2 positions, which were basically when I got triggered here and when I got triggered right there. Now, also as well, I did trail my stop up. So my original stop was around here. So as prices were making higher highs, I ended up trailing my stop to around, I think it was about here. It was below this swing here. So when prices ended up pulling back, this position, right, this position here ended up again with a pretty much a break-even trade. And then this position, this higher position, ended up with a very small loss because the original, remember that the original stop loss for that entry was here. Yeah, so that was the original trade. Yeah. And I'd ended up moving my stop loss up to here. So 2 full wins, 1 break-even trade, and 1 tiny loss. And again, that whole trade idea ended up being profitable, right? Net profitable in the account. So the new trades I have entered into this week was the Swiss yen. So re-entered. Based on the daily supply zone, and my entry has been here. I'm currently in 3 positions, so my entry was there. Prices had pulled back, right, and triggered me into 2 more positions. So I'm in a market order and 2 pending sell pending orders. And so again, as I'm managing the trade, what I'm looking for is a 1-to-1, which is going to be around here. So if prices come down and hit that 1-to-1, that'll be 1 position out of 3 that have been hit. I'll cancel the top pending order, take the risk out of the market. I'll be in 2 positions, and then the second position, what I'm looking to do is try to hit a 1-to-1 on that position so that this whole trade will be a profitable trade. So I'll hit 2 profitable positions, and then what I'll do is I'll swing trade and I'll hold this trade here. Yeah, and hopefully, this comes down to the lows again and see how far this can run. So let's see what happens on that one. And then the New Zealand yen, the New Zealand yen trade. Again, my entry was right here. We've pulled back on the Friday, and now we've entered into all 4 positions, right? So we've got there, there, and there. So now, again, for this to be in this position to be profitable, my 1-to-1 is there. So if prices pull back, hits a 1-to-1 there, then brilliant. I'll hit 1 out of 4 positions. Then the next position that needs to hit a 1-to-1 will be there. And if prices come down to around here, then that would be another 1-to-1. So then I'll be pretty much at a little bit of a profitable trade because Each trade that I do take is slightly larger than the lower trade, right? So it'll be at least a very small profit, and then I've got two open positions that I will um, look to swing trade and hold while trailing my stop below any lower highs and lower lows as prices make lows. So yeah, let's see what happens this week. Also as well, if I do get stopped out on this trade, I am looking to re-enter on this, as I do think that this is going to be a nice stop hunt trade. I'm hoping that the New Zealand dollar and the RBNZ cut rates, and if they do cut rates by 50 basis points, then hopefully this should want to roll over. But who knows when it will, right? No one knows when it will. It could be a delayed thing, but I will get involved in this again to the downside. But let's see. Anyways, hope you enjoyed the analysis. Take care, and I'll speak to you all soon.